Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Markets are in free fall this morning. This would be our third down day in a row. So interesting that just a few days ago, I went over multiple things that showed me a correction in the markets was likely at hand. The best one of all, honestly, was looking back at the COVID collapse and how the rebound after 6 months was identically a 1.8% multiple of the drop. And that's exactly what we've done since the Liberation Day lows here on the bounce in exactly 6 months as well. In addition, the QQQ, NASDAQ 100 hitting a trend line, an ascending trend line going back to COVID. All of these things piling up. And then you see the euphoria. ACLO, right? ACLO is getting crushed today, folks. And again, this was a euphoria bubble stock, literally no revenue, no profits, barely breaking ground on any nuclear reactors. But because of what we've seen in the excitement around data centers and energy, it went basically up 100% in the last month or so. Add in the fact that we saw NVIDIA doing this supposedly great deal, $100 billion to OpenAI. So OpenAI can turn around and buy NVIDIA chips with that $100 billion. Oracle doing a $15 billion debt offering. I mean, these are all things that really, if you're an investor and you're looking at valuations on the market, if you're not a little concerned, then you're a little crazy, frankly. And again, people have felt like they have to be long the market. Hedge funds feel like they have to be long the market. But you know what that does? It means that there's a lot of selling potentially to come when they start to get scared. So be careful out there, folks. Now, let's go over some economic data here this morning. First and foremost, jobless claims coming in at a no problem 218,000 level. All right. Now, I've got to bring this up. I can't not bring it up. Basically, 2 weeks ago, before the last jobs number, which was this one, before the Federal Reserve made their decision to cut 25 basis points, 50 basis points, whatever they were going to do, and we know they cut 25, we got a jobless claims number that mysteriously spiked to 263,000. Now, 263, the news, the mainstream media was like, oh, look, 263. We might see the Fed cut 50 basis points because of that. Well, the Fed did not, right? But then the next one last week, 200 back to 231,000, and this week 218,000. Like it's a little shady, frankly. It is that number, the one number before the Fed decision, was all of a sudden spiking higher. Listen, it's neither here nor there. I'm just throwing out the information. GDP this morning, very strong, 3.8%. The economy, at least per GDP, is doing fine. Now, you might say, well, why aren't the markets rallying? Because the market's number one, valuation is ridiculous. And number two, the markets are addicted to cheap money. So interest rates are spiking because of this good economic news today. And the markets don't like it, frankly. And they're thinking about a correction, right? We're seeing money flood out of some of these areas. Now, the other thing that I've been looking into is that the AI sector is now making up more than half of the entire GDP of the US. This excitement, this spend, the CapEx spend for AI is literally more than half of all the economic activity in the United States. Now, the reason why that's scary is that if we ever see a slowdown, which inevitably will happen, it's almost a guaranteed recession. So as long as the AI issues continue, then they will carry the GDP for this country for here on out. But at some point, if that slows, it's literally like a guaranteed recession if GDP or if the spend in AI slows. All right, durable goods. Look at this. Durable goods, 2.9% versus a negative 0.3 forecast. Great numbers there. So listen, all in all, does this maybe make the Fed think about whether or not they need to cut rates in October? Per the Fed watch tool, we're still going to get a cut. But you have to say to yourself, is the Fed really going to cut that much going into the rest of the year and into next year? That's the question, and that's what the markets are reevaluating. All right, into the charts. S&P futures. This was yesterday's market action. You can see we had a nice down day, second day down day in a row. Overnight, we started out floating up, and then the selling has only gotten worse. Markets are down sharply. Now, if we go to the S&P, now the S&P itself does not reflect today's down move, but we have this trend line that goes back to 2023 that should be noticed, right? If we take a look right here, you have your pivot low from 2023, your pivot low from 2024, your pivot low from January of 2025. And lo and behold, what did we just tag on the S&P or kiss on the S&P a few days ago? that trend line just from the underbelly. Now, this is actually even more impressive when we go to the QQQ, NASDAQ 100. Look at this. If we go to our weekly chart, and by the way, this doesn't take into account where we're currently trading this morning, which is down significantly. But if we look at this, right, we look at this trend line, and if you look, this line goes back on the weekly to the COVID low. So COVID low to this pullback low here before the bounce into the bear market. So this was the bear market of 2022. Then we went up, tagged it, 15% drop, tagged it, 25% drop. The big question you got to ask yourself is, what's the percentage correction we're going to see off of this hit? So we got a 15%er and a 25%er. Now, listen, it doesn't mean it has to be the average of the two, which would be 20%. It could only be 5%. It could be 3%. It could be 10%. We just don't know. But what we do know is that this trend line going back to COVID is significant. It either causes massive bounces, right? Even this bounce was a pretty big bounce here on a percentage basis, right? Or it causes big declines. And so you have to think that there's something here that will create a decline. Another signal, the Dow Jones Industrial Average. All right, I've highlighted this chart. I talked about the topping tail yesterday. Well, guess what? We broke the trend line after the topping tail. Now, listen, we haven't confirmed a breakdown on the Dow yet, but we are now below. So not only, and listen, you can break a wedge pattern. This is called, again, a wedge pattern. You can break a wedge pattern without a topping tail, right? But when you add in a topping tail and a wedge break with confirmation, like let's say we confirm today, the odds are starting to stack up higher and higher, right? And that's the key, is that, any trend line break, you say, okay, it's a trend line break, 60% chance it continues in that direction. Once you add in more factors, the probabilities go up and up and up. And it starts to become, essentially where there's smoke, there's fire. So we want to keep an eye on this, guys. Very, very important. The dollar is getting a bounce here. Why? Well, again, another update in the dollar, good economic news. I mean, remember, the less the Fed essentially has to lower rates, the stronger the dollar is maintained. Now, the kicker is this, guys, is that even if Jerome Powell and the Fed and friends decide to only lower it, let's say they do lower 2 more times, but then they don't lower anything next year, Jerome Powell's out of there come May. Like, he is not going to stick around. He's not going to be allowed to stick around. He's going to be let go, and there'll be a new Fed chair. And so you have to think that rates will come down by next May. The question is, what's the state of the economy at that point? But I think it's important for us to recognize that the writing is on the wall. Jerome Powell's tenure as Fed chair will be over in May of 2026. All right. 10-year yield. What do you think it's doing? Of course, it's up here. Why is it up? Well, simply put, because the good economic news means the odds of a Fed rate cut are lower. Now, the other factor too here is this, is that when rates go up on the long end, remember, the Fed doesn't control the long end. The Fed could literally cut rates to 0 tomorrow, and the 10-year yield literally could stay right here. Now, it may go down a little bit, but I would guarantee it wouldn't go to 0. The key is the Fed does not control the long end. And so with strong economic data, with tariffs, with all these other issues, what does strong economic data plus tariffs equal? It equals potential upside in inflation, right? And that's the problem here, is that rates can also be going up because expectations for inflation could be ratcheting up as well. The other thing to keep in mind, tomorrow we get PCE data, the favored gauge of inflation. That's going to be a big one for this market overall. All right. JBL reported earnings this morning. This isn't a massive company, but it's worth talking about. I think it's about a $20 billion company. It is coming down. If we look at the daily chart had kind of topped out back here and then kind of double topped right there, and now is coming back in, falling a little bit pre-market. There's no opportunity here, though, for me as a trader, unless it gets down to 200. 200, yes, you would have some good support. It's at 215 right now. KBH, a housing stock, reported earnings yesterday after the bell. This stock is only down fractionally. Again, the housing market continues to be a very tricky market right now. You can see that you kind of ran up going into earnings, then a small pullback. The stock is basically flat to negative. This is the real one to talk about right here. This is one I came out to you guys and gave you guys a warning on just days ago, right? We talked about how they weren't even going to, the stock ran up, I think 30% last Friday, was it? And I came in on Monday morning in this very game plan, this very My Trading game plan, and said, guys, they literally won't break ground on that plant until 2030. All right. This company makes no revenue. They won't even make revenue for years to come. Like, this is a picture perfect meme stock that when the music stops, it will collapse. And lo and behold, what's happening? It's collapsing. Now, it could be even due for a bounce now, which is kind of crazy because things don't move in vertical moves one way or the other without bounces. But as a swing trade, I'm not going near it until it gets down to about 92.50. But the kicker here, guys, is that yesterday the stock made a new all-time high at the open. It then closed down 8%. At the lows today, it was down 20%. It's getting a little bounce off of these lows. Take a look at this chart. All right, look at this vertical move up. Again, this is what happens in bubbles. In bubbles, and by the way, I did trade through the .com. I traded through the 2008, 2009 financial crisis. I've seen a lot of bubbles in my day. I've seen the crypto bubbles before they collapse. One thing that you start to recognize is that when the crap runs, and I'm not saying Oklo's crap, right? I mean, the OpenAI Sam Altman guy, he has an investment in there. But when things that have no revenue, no profits, when they start to go up in billion-dollar increments and 20 billion in terms of Oklo, that's what it got above, there's a problem. And again, eventually that will come into a more reasonable valuation. And I saw it in the .com era. Like, literally, companies would just attach a .com to their name, like, johnsmith.com, whatever it is. They'd be running the company out of their parents' basement, and they put a .com, and all of a sudden it's worth, back then it would be like 100 million or 200 million. That's the equivalent of to like 100 billion today because of all the liquidity in the system. You guys get my drift on that. In any case, look at this fall. I mean, this was yesterday. This is where it's trading today. There will be good support here at gap fill at 105 for maybe a day trade. But the big level is going to be here at around 95 to 92. Look at this trend line. All right. Now, again, do I like it as a long-term investment? Not even close. All right. Would I like it at 92 as a buy for a swing trade bounce back to like 105? Yeah, probably. At that point, I think it does become very, very interesting. But wow, I mean, talk about a drop in that stock. There's another trend line. If it were to really, like, let's say the stock market really collapses, then you could go as low as 77 on this. That would be another big support level. All right. Look at these high flyers. They're all coming in now, guys. All coming in. STX, Seagate Technologies, a chip stock. The chip stocks are getting hammered today. SMH broke briefly above this upsloping trend line. Look, it's now below the trend line or right to the trend line. This is going to be a big thing because this closed above, didn't confirm, and it confirmed. Now, the important thing to understand is when something confirms, the odds that it's a real breakout are pretty solid. But what that does is it means that if it ever fails the breakout, which is confirmed, meaning it reconfirms below, the moves are usually massive to the opposite direction. In fact, the old adage in Wall Street and amongst us traders is that the biggest moves in a stock or crypto come from failed moves. And the reason that happens is because people get so excited about the breakout, you see more people piling in, right? The shorts all cover, more people pile in. When it fails, you have all these people that piled in that are panicking and they're dumping, and then the shorts are coming back and attacking it like crazy. And so it creates massive selling pressure. And that's why the biggest moves come from failed moves. So that's something I'm watching on the SMH here. And listen, it looks like we're going to open like right at the level here. And listen, even if it closes below today, that's not failing. It must, if something confirms above a level, it must reconfirm below, right? So you have to, what happens above must happen below. That's the old adage that I use in trading. All right. Goldman Sachs. Yesterday, I highlighted a topping tail. Look at the drop yesterday, and today it's trading lower. I mean, there's so many topping tails. One of my favorite shorts right now is Caterpillar. Look at the trend line on Caterpillar and the topping tail. Small down day yesterday, should really fall. APP, this thing is going to come back to earth. It's trading at 621. This ran up on an S&P ad. It got added to the S&P. It went up for like, what is this? 2, 4, 6, 8, 10 straight days. Then sideways chop right at the high end of a parallel. Boom, it's going to come in. All right. My guess is this goes below 600. Maybe not today, but within a day or two, it's below 600. Keep an eye on that one. All right. Couple other stocks. Robinhood. Robinhood has been up like crazy. It's starting to correct. I do think it's coming in hard, guys. First major support will be around $104, $105. Look for that to come in over the next week or so if this market continues to show weakness. Gold was up in the overnight. It is now flat. This parallel that I gave you guys, dead on so far. And did you guys see GDX yesterday? GDX got smoked yesterday. Now, listen, it still had a great run, right? I mean, it's only down 2 days in a row, basically. But one of the things I told you, I gave you guys what I call the keys to the castle. Keys to the castle mean I gave you the exact target on this, where it was going to reverse. I'm going to show it to you right now. It's incredible how you can use this stuff to your advantage. So the idea is what happens above happens below, right? That's what I just told you guys. So you have this dip, and then it found its way back to the trend line. Dip, back to the trend line, back to you guys get it. The furthest this was away, and I showed this to you guys the other day, the furthest it was away from the trend line was this trend line, was this distance, right? That's the furthest at any point along here, right? It was the furthest it was away. And so that means that on the other side of the trend line, it should only ever get that far away. Lo and behold, look at that. I mean, holy cow. I mean, literally that marked the top. As above, so below. That's a great remembrance for education, guys. And you guys know that game plans, it's all about no BS and just charts and data, but it's also about education. And I'm here to educate the masses because I was John Q. Public. I was the worst trader in the world. I was the worst investor in the world. I did everything wrong. I would buy at the highs and then be like, oh my goodness, I just lost a boatload. And how did I buy right at the top? Like, how is that even possible that I could buy at the exact highs before collapse and vice versa at the lows? I've done it all. I've made every mistake in the book. And listen, if I can help you guys, I'm here for that. Absolutely. All right. So that's very cool on GDX, by the way, as it continues. It looks like it's down fractionally today because gold is basically flat. Silver, this is interesting. Silver's trying to break through. We knew this level on the weekly chart was going to be resistance at 44 to 45 area. It kind of stalled out the last couple days, building the beginnings of a bull flag, right? If we go back to the daily consolidation, and it's trying, but the market conditions are causing some issues here. So let's watch this closely. If we can get a close above here, it really does open the door for $48 to $50, but this is really important to monitor. All right, we'll quickly look at oil, and gas, and then we're going to look at Bitcoin and ETH. Let's look at U.S. oil here. Oil down a little bit today. It just continues to chop. You know, listen, I'm glad I trade more than just oil, because if I traded oil, I wouldn't have had a trade in, basically a month and a half, right? Since it broke down here and then it's just gone like this. It's one of the reasons why, some people say like, oh, I only trade the S&P futures. Or some people say, oh, I only trade, the meme stocks, or I only trade crypto. And I'm like, dude, once you learn the charts, as long as there's liquidity in a chart, you can trade anything. And you're going to just get more opportunities. And it's one of the great things about learning technical analysis. It's applicable to every other thing out there, as long as you have liquidity. Like a small cap that trades 1,000 shares a day, like a dollar stock, like one buyer or seller will send that stock way up or way down. It's not going to rely on the metrics of technical analysis. But if you have something that trades volume every day, it doesn't matter if it's crypto, commodities, currencies, anything, stocks, it can be traded with technical analysis. All right. So that's oil, natural gas real quick here, guys. Nat gas, let's take a look here and go through. Nat gas, again, getting a nice little bounce, but it's still stuck within this little bit of a range. I'm just going to extend that range just so we can keep it there, and we'll continue to monitor it. All right, Bitcoin. Bitcoin had a great bounce yesterday. I think to some extent, Bitcoin saw money flow yesterday. All right, why was Bitcoin up when gold was down and the S&P was down yesterday? And the answer is, I think that recently there has been a certain amount of money that's come out of Bitcoin that's gone into gold and gone into the S&P, because Bitcoin hasn't really made a new all-time high in 6 weeks. Now, one of the things I've told you guys is that that's the marker of a market top. When Bitcoin tops in 2017, 6 weeks later, stock market topped. In 2021, Bitcoin topped. 6 weeks later, stock market topped. So just a little bit of alpha there. But I think that yesterday you saw some rotation of capital into Bitcoin as gold was falling. People starting to say, all right, gold's played out. It's into its resistance. Let's rotate into Bitcoin, and probably something from the stock market as well. Problem is, if fear starts to rise, Bitcoin's going to drop either way, because money starts to get pulled out of everything. By the way, even if you go back to COVID, the COVID collapse, everything fell, including gold. Gold got smoked during that month of collapse in the markets, but then gold rebounded and went to highs, obviously, very quickly. Once the panic subsided, people said, okay, we want to be invested. We just want to go to the safe haven of gold. And again, that can happen very, very easily with Bitcoin as it drops. Now, on Bitcoin's chart, what are we watching? We're watching, does the neckline of the Head and Shoulders break? That's this level here. It's right around 110,300, 400, right around there. Let's watch that closely today. Right now, we're trading at 111,500, so we're still above that, okay? ETH. ETH is in a little bit of a pickle here until it gets down to this level. Right around 3,800, notice all the parallels. I mean, amazing how this chart has literally traded in parallel after parallel after parallel, all parallel to each other. It's an incredible chart, as you can see here. I mean, look at all the pivot points. What does this tell us? We broke here. Well, today we likely will confirm. We haven't confirmed yet, but it likely tells us we're going down to this trend line. I will actually probably buy some ETH at that level if it gets down to about 3,800, 3,790. It's a very, very solid level for a swing trade bounce. I'm not going to pretend to tell you where things are going to be in a year from now or even 6 months from now. But as a short-term play, that would be a high probability buyable level. So I'm going to keep an eye on that. If it breaks there, probably a small stop here at 33.70, but then you're really going all the way down here. I know bulls don't want to hear that, but it's my job to know upside and downside probabilities, right? And so right now I'm only focusing on that first level for a buy, but I need to know if it breaks these levels, where could it go? Just like if it breaks to the upside, what's your upside near-term target? Again, all technicals, all the time, no BS. Leave that for the social medias that are crazy like X and all these other ones where it's just constant hyping. It's basically pump and dumps nonstop in this stuff. But in any case, guys, I got to get to my trading room. It is going to be a big day of volatility, lots of trading opportunities. Thank you guys so much for tuning in. Remember, share this with a friend or family member if you find it useful. If you've learned, I just ask that you share it around. I'll give you all my free alpha in here. Just do me a favor and help spread the word of the good stuff that we're doing here at Verified Investing. Have a great one, guys. Thanks again so much. Talk to you soon. Take care.